In this video, we are going to be analysing Carvana, ticker CVNA. Now, I wanted to cover this because we were doing the analysis literally the day before. We were talking about if it continued up, what are our key targets. We basically got that day near enough perfectly. And then coming into that next day, we did actually make a video at the open. And again, this was uploaded before all this big movement. Again, we still said we were focusing on that 26. If we can't hold it, still expecting that move to at least 23.50. And then if we break that, we then have an 18.40 target. And we can see on that Friday, basically played out really nice. And again, I was looking at the short bias. Did have a small stake in the stock, trading it with credit spread because I couldn't get shares available to short. But again, we traded to that 23.50. You get that temporary bounce as we expect. You get that retest. You get that break. Now, the only reason I'm going through this is because, again, whenever we're talking about these levels, this is the exact movement we expect to see. The first time you hit the level, you expect the pullback. And then if you retest it, you kind of expect that break, but you still need to see that break above it, come back to test it as a support, and then if it holds, then we can play direction. But in this case, we temporarily broke above, snapped right down, we couldn't hold it. And then what happened? We came down, we tested this level again, got that bounce, retested, broke. So just wanted to go through that. Now, just wanted to go through what's going to happen coming into the Monday and kind of the rest of next week. So these levels don't change. These levels are still the exact same as what they were. So it's basically when we come into next week, firstly, reacting, unless we do a big move pre-market, it's how do we react to this $18.40? Because again, this is the target we've now hit. We broke the third deviation on the 6 month. We broke down. We tested this after hours. We got that temporary bounce as to be expected. And now when the market's open, that's really where the key bit of information is going to come. And basically what I mean by that is if we open up, we break below, we come back to retest this as a resistance, we hold, then what's likely to happen? We're likely to break to the downside, and then what's going to be our target? $14.75 and $13.25. So if we break to the downside, those are our key targets to trade to. And the reason we point these out is because, again, if we're holding it short bias, we want to be locking in. That's just under a 4-point move. Makes sense to be locking in profits coming into here because what's likely to happen, like we've seen before, you get this temporary bounce, or sometimes it can be the full bounce, and that's why we lock in profits coming into here, because if it's not a temporary bounce, we don't want to turn a winning trade into a losing one. So again, we lock in profits, we will hold some size through this potentially temporary bounce, and then look to hold the rest through the break, and then down to 13.25. So that's the short play scenario if we're looking weak. Now, if we turn a bit more bullish, we start seeing buys step in, trying to take us back to the highs, then what do we want to see? So again, obviously, we're going to have to hold this level. We're kind of broken back above it. So it's now about, can we just hold? I would kind of be waiting for kind of a break back above kind of 19.25 to justify sort of any sort of upside move. But really what I'd want to see, and this purple line is key. So this isn't a deviation level. This is just a longer term level, which seems to play out quite well. You can actually see it play out there. And if we make this an even longer term chart, say if we go into a 3-year chart, what you'll be able to see is this level comes in at numerous times as a key level. So again, that's why we're paying attention to it as more of a level to basically we want to see break. If we're bullish on the stock, we want to see this level break above it, come back to test it as a support, and again, we want to see that hold. If it can hold, then we want to see that move to the upside, and that's where we get our two targets again. So then we'll have that 23.50, that's our third deviation on the 6 month, and then we get that target of $26 once again. And now if we start to break it, we do have a level at 28.60. These ones aren't a massive focus. When you see these red levels, these are fourth deviations. I don't tend to trade as much off these. I'm not a biggest fan of these. The first three are the key ones. So this level is just usually used as reference. You can potentially lock in some profits here. If you start to see a pullback here, you know why. But again, probably not something I'd trade solely off. But if we can break above both of these levels, and then we can again test it as that support and hold, then that's where we can actually have a big upside move on Carvana, and we could potentially see a move all the way to $37.50. Now again, that may be difficult considering we have already become extremely overbought. We've come into that range and we've now sold off quite heavy, so it may be hard for the buys to take us back to that previous high. But again, if they can, it's all about being prepared, and it's all about then if we can hold the 28.60 if we can. Again, that target would be $37.50. Now that is our third and final deviation. That's the third deviation on the 1 year. If we come into here, I would not be or at least on my own account, I'm not holding anything past this level, even though I won't really be trading at long bias to that level anyway, because I'm more of a reversal trader. But again, that would be the absolute final target, because when we come into here, we are extremely overbought. Very rare that data trades above this level, and if it does, it tends to be short-lived. So as soon as we come into that range, that's where I'll be hitting this short bias, looking to trade two targets of 28, 26, 23.50, $20, 18.40, and again, so on and so on. And the way I play these are defined risk strategies, usually using some sort of options involved, because again, if we get short here and it does go parabolic, it squeezes up to say $70, that's fine. Our loss is no more than if it went to $40. But in the high chance, a much higher chance that it starts to pull back, then we still have all that upside opportunity on the downside. So that is a breakdown on Carvana. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.